just manage wealth, create legacies. Hi, and welcome to yet another exciting and informative episode of Storymakers. This is your host, Shefta Khan, and today we have someone who has not just yet shaped the financial market, but have also trained thousands to excel in the field of investment. With an incredible 28 years of experience in global trade market, investment, education, communication, and so much more, he has been a trailblazer in innovation and launching products. He is also the co-founder of AAWA Innovation Education. Please join me in welcoming the innovator, advisor, and communicator, Mr. Sujoy Das. Hello and welcome, sir.
Hi, how are you?
I am good. How are you?
Very well, thank you.
Sir, I would like you to please begin with telling about yourself and your journey till date.
So it's been a 28-year journey, Shifta. So started off with a bank in Delhi way back in 96, where I was a trader in currency and interest rates, and then moved on to the asset management industry in the year 2000. Worked for DSP Merrill Lynch Mutual Fund as a fund manager, then went on to become head of investments with Bharti AXA Mutual Fund. And then the last 10, 11 years was with Invesco Mutual Fund in Mumbai, managing money for Indian investors and also advising foreign investors for their investments into India. Now, in 2021, I took a break from the asset management industry
During the COVID time.
during the COVID times, and then set up this company called OAWA, OAWA. And the whole objective, the inspiration of setting up OAWA is to empower wealth managers to play a meaningful role in their business and to scale up their business. Okay. So that's what we primarily do at this stage. So we are an education cum consultancy firm for wealth managers in India.
All right. I mean, quite a lot of journey, I would like to say. But here, I would want you to please tell me what made you get into this?
All right. So that's a great question, Shefta. So the journey in the asset management industry, what I realized over a period of time, in case we want to make it a meaningful mission, it is just not about fund management. It is also about distribution. Getting this mutual fund product to as many millions of people in the country will be a true inspiration for all of us. So for this industry to grow, so we felt that there is a serious shortage of education and consultancy for the wealth managers who can definitely play a noteworthy role in the life of an investor. So that is the space that we are trying to work upon,
Okay.
educating them, consulting them so that they can spread their services to roll out. Absolutely.
So you found a loophole in the market and you worked.
Gap, not a loophole, maybe
There was a gap.
there was a requirement, yes.
Okay, there was a requirement and you fulfilled that requirement.
Absolutely, Shifta. So we saw that while in India, the entire asset management industry is growing, and if I look at the last count of December 24, so we are close to 68 lakh crore, and it's galloping. It's like the entire industry is doubling every 3.5 years.
My goodness.
That's a massive size. And while the banking industry is growing, mutual fund industry is growing far rapidly. Okay. Now, while the mutual fund industry is growing rapidly, there is an increasing role that wealth managers need to play. However, in India, there is a shortage of wealth managers.
Okay.
And we truly believe that we can definitely excite youngsters to get into this field and become and start a profession as a wealth manager.
Absolutely.
And then existing guys to play a far more bigger role where they can manage money for more number of clients and they can manage a larger quantum of money as well.
Yeah. Pan-Indian across the globe, right?
Absolutely. So as a wealth manager, you can definitely guide people to invest into India. You can guide people to invest in overseas investments as well, assets as well.
Okay. Before we move further, I would like you to please tell me if a person is aspiring to become a wealth manager, what are the key requirements, firstly? Secondly, how should they start and how would they know where to begin with? Yes.
So there are small few steps to be taken. So as a wealth manager, you can start off as a mutual fund distributor in India, or you can start off as a registered investment advisor, RIA or an MFD. All right. So if you want to start off as an MFD, you need to be at least a class 12 pass. Okay. So that is the minimum qualification. Thereafter, there is an NISM examination to be cleared, and that certification is valid for every 3 years, and you have to keep renewing that. So that is the one way of becoming a wealth manager. The other one, which is an RIA, you need to be a postgraduate in finance. You need to clear the exam of SEBI, and you can become an RIA. So that is the first step. So in terms of getting your certifications and eligibility clear. However, we need to understand the subject. So building your expertise, Shweta, is important. Expertise, so that eventually what really happens is that you are carrying an intellectual capital with you. People will reach out to you and align with you only in case they feel that you are expert in this subject, you know this subject truly well, and you can add value in the life of your clients, where you can truly give them advice so that their money can grow in a very easy, simple, and without too much of volatility around. Okay, so that is building your expertise. Then comes your business model. After all, it's a business for you, right? You're just not going to pick it up as a part-time profession. You're going to be a full-time wealth manager. So setting up your business, the entire business model, branding for yourselves so that you can speak well, communication for yourself, sales, and eventually your operational efficiency and team management. So it's a complete, many small little parts that you need to take care of, but it starts off with your expertise.
And you need to be really good at it.
Like you're a doctor, right? A doctor has to definitely read through 5.5 years, clear the exam, and become a doctor.
Experience, yeah.
Yes. So you're a financial doctor. So you have to get your expertise well in place, and then build up ancillary business dynamics that is needed for setting up a firm as well.
Okay, and expertise will come along with the years of experience you will cater into this industry, right?
Good question, Shweta. So what really happens is that it is just not about reading few books and figuring out that how the equity market behaves or currency behaves and so on. It is all about also understanding how the market cycles move.
Yeah.
So the same set of parameters that could have changed the market dynamics in one direction today might move the market in the other direction tomorrow. So looking through this, what you said, it is the experience of seeing through multiple market cycles also gives you the confidence about what to expect when the market turns around the next.
And channelizing it day by day.
Absolutely. However, one is experience. But you know what? For a client who is looking for your services, they are truly looking for your expertise to solve the problem of theirs.
Correct.
Everybody wants their money to keep growing and keep growing at a pace which is decent, but with not too much of volatility. Nobody likes the money to degrow, right? Everybody wants the money to keep growing.
Correct.
Whether we are investing for 5 years, whether we are investing for 10 years, 15 years, everybody wants almost like a straight line. But it never is a straight line. So that is the role a mutual fund distributor or RIA truly plays, that how much straight could be that straight line. Okay.
Yeah.
So what the client eventually is looking for, they are not interested about whether you carry that certificate or whether you're a PhD from Harvard or whether you have managed money for 20 years. They're truly looking to see whether you have the expertise to solve this problem of theirs.
Problem of theirs particularly.
It is experience, definitely, which will give you the confidence and the expertise, but the client is looking for your expertise. So the one thing that I want to tell to everybody who is seeing this show is that if you are young as well, don't worry. It is experience matters, but expertise to solve a problem in your client's life is far more important.
Well done and very well answered. I'm sure for whosoever people are watching, I'm sure they'll get an answer. And if they're getting nervous at their experience level, they can get an expertise, they can gain some experience, and over the time, they'll do well in this industry.
Absolutely.
Perfect. After a distinguished career managing vast sums of mutual funds, what prompted you to transition from fund management to founding OAWA, which we also call OAWA, an education cum consultancy firm focused on empowering mutual fund distributors?
Absolutely. So what we figured out, Shweta, is that when I look at this asset management industry, there are quite a few mutual fund distributors. I think the number goes about a couple of lakhs.
Okay.
A couple of lakhs of mutual fund distributors in our country. However, the quantum of money being managed by each of them are quite small. I would say 80% of the mutual fund distributors are managing assets which are maybe under 10 crore.
So they're just scared to do that?
So when we got into it, we figured out there are innumerable reasons which has got in the way where they have not been able to scale up their business. Yeah. And it's only a handful of people who have been able to scale up their business to really meaningful level of managing 500,000 crores and so on. Even if you manage 100 crore AUM, it's a very decent sum of money that you commission that you will earn for yourself on a year-on-year basis. But nevertheless, the market is expanding so rapidly. We felt that everybody can manage far more than what they are managing right now.
Correct.
So the problem that we figured out is the first problem is that people do not know whom to reach out.
Okay.
Where do I identify my clients?
Mhm.
Okay. Secondly, they are fearful about if the client asks me something which I am not aware, then what do I say?
Then-
We will fumble. Correct? You're like a doctor, right? Somebody says, you know what, I have a pain here, but you don't know the answer to that. What do you say? So if you say something which is absolutely incorrect, immediately the trust is gone.
Correct.
And in this business of finance, trust is supreme.
Yeah.
Trust and
The
authority
pioneer of everything.
is the pioneer of everything. That has to be established.
Right.
Either you establish it like this or you disintegrate it forever. So that is the space. So we primarily work on 5-6 different things in order to help people. So we see problem first around the business model.
Okay.
Of a wealth manager. So
You are explaining where to look for the problems.
correct. So your question like how do I address? So what got me in? So we identified 5-6 different places where there are specific problems a mutual fund distributor is fighting. So that we felt that we have the rigmarole, we have the opportunity to put our brain and wisdom together to create something for them. So we work with them on their business model first. Okay, so that is a problem. We see that people do not see beyond. They are happy with 5 crore, 10 crore. So how do I move to 50? So that is one.
Okay.
Their mindset, their business model, their expertise, then their branding, messaging, communication, their consultative sales process, and eventually in this new age technology, operations, team management, all of this. So we found that there is opportunity in all of these things around the mutual fund distribution business.
Okay, perfect. Can you describe like the key challenges mutual fund distributors are facing today, coming to the questions that we just asked?
Correct. So maybe I just spoke about it briefly. I will elaborate. The first thing is that many a times we notice that a mutual fund distributor actually has got into this business per chance. They have got into this thinking that there is enough and more money to be managed, but they are grappling how to move beyond. So the first thing is that they start off with their near and dear ones, their friends, families, relatives, and saying that, you know what, I have become one. Can I start managing your money? So that's where they start, and that's where they stay. They do not know how to go beyond the circle of reference of friends and families.
Typically, they are not able to figure out.
Not able to figure out about how to attract people towards it.
Beyond their near and dear ones.
Near and dear ones, they are acquaintances. Okay.
Yeah.
So one needs to go beyond that. Okay. If it is just dependent on near and dear ones, then it is not a predictable business model.
This will never grow eventually.
It will never grow. You will run out of your list of people on your phone book and they say, whom do I call up next?
Correct.
So first thing is that breaking that. Okay, how do I start making more people aware about my services so that they can reach out to me?
Yeah.
So that is the first big problem everybody faces. Even I've seen that with people who are managing thousands of crores to people obviously managing 1 crore, 2 crores, and so on and so forth. So that is the first big problem. Second big problem is that everybody does a self-assessment about their expertise level.
Okay. We do. You also do it.
We also do theirs. We also do ours, and they themselves do theirs. So nobody comes out as a 10 out of 10. Everybody could be 9, 8, 7, 6, 5, and so on. So the expertise level keeps dropping. Okay. The thing is this, what we keep saying is that it's a fast changing world. Financial markets are dynamic. Investments is a dynamic space anyways. So you will possibly have to keep working on this. Even like a finance minister and an RBI governor, keep giving this example. They also keep reading every day.
Right.
So you also need to keep reading. You are your Chalta Firta intellectual capital. You are carrying your knowledge, your wisdom with you. So if there is some parts of the market, maybe you do not know, maybe cryptocurrency to a certain extent, maybe you do not understand currency to a certain extent, please keep reading that. So expertise is something that we see is a big lacuna in this world of mutual fund distributors. The third thing, people who have like 5, 10 years, 15 years into this space, they are getting really fearful about this advent of technology and digital stuff.
Okay.
So they're still holding on to those fundamental ways of picking up business and there is a new way of picking up business. So these three key challenges is a continuous one. And the fourth one is when people become little bigger, when you're managing like 150, 200, 300 crore, you obviously hire people, the team. So they see that the team is not working as efficiently as they are working. So it moves from a sole proprietorship to a firm and so on. But everybody is a wealth manager in your firm, but you are possibly not finding them the right set of people to attract to come your join your firm, and they possibly are not functioning as well.
Correct.
So team management, efficiency, advent of digital technologies, expertise, and initially the whole objective of getting clients are many. I think there are 5-6 top issues and challenges that a mutual fund distributor is continuously fighting.
So once you reach like 100, 150 crores, you have a big company or a firm to manage. How do you attract the right people to work under you? Is there a certain path that you should follow or people who are watching should follow?
So as you keep growing, your set of challenges will keep changing. So initially you are grappling to find your feet on the ground. Okay. So you will be looking for your first 5 crore client, 10 crore client, and so on. In this process, what is the first big problem that we generally get into? In our zeal to keep growing faster, we sometimes pick up every small little client who comes our way.
Okay.
It could be a 1,000 rupee client, 5,000 rupee client, and so on. So in the process, what we have seen is that we see in our group of community, there are many mutual fund distributors who are managing 10 crore of money, but they have like 200 clients. So in the process, what you're doing, you're just managing people because everybody will have certain set of questions to ask.
Yes.
And rather than managing money. So that is one problem.
There's a dilution of a lot of people.
Yeah, so there are a lot of people. So either you focus on that or you go for high ticket. Now the thing is this, depends what kind of business model you want to set up. If you want to set up a real retail one, it is absolutely possible. But you shouldn't get into a retail kind of format, but have an aspiration of getting into the high net worth.
You should get into B2B.
B2B, yes, eventually if you have those levels.
Aspirations, then definitely.
So how it works is that people generally start off by managing money of retail investors. Then you move into an affluent individuals. Then you move into high net worth, ultra high net worth, then family offices, and eventually corporates. That is the
Hierarchy that
hierarchy generally people can go through. However, these are different set of clients. The way you have communicated and presented yourself or the entire market dynamics to a retail might not resonate with the ultra. So that is the big change everybody needs to go through when they are just going up the ladder. That is one. Second, time is precious, right?
absolutely.
Many a times what we have seen is that mutual fund distributor ends up speaking quite a bit. Like in a meeting, sometimes the meeting drags on for 1 hour, 1.5 hours, but they become inconclusive meetings because by the time the meeting ends, you've forgotten where it had started. Okay. So ability to keep concise, stick to the point.
Yeah.
And what we have seen, the average age of the investors are also declining. People are to the point, specific, rather than spending time over multiple cups of tea and coffee and so on. So ability to keep concise, to the point, ability to connect with the next generation rather than just the father and the grandfather, I think are the challenges that people have to work through as they get into this profession and move ahead.
And I think every day is a new day, and with a new challenge it comes with. So you're figuring out every single day how to walk through, right?
Yes, because while the market is the same, the market prices keep changing.
Yeah.
So with changing market prices, the dynamics change, the risk parameters change. Suddenly you might wake up in the morning and see that the currency has fallen too much. It could be a Russia-Ukraine war the other day, oil prices going up. So the parameters are the same, but the level of the parameters are changing, and hence your risk dynamics is also continuously changing.
Well said, well said. So could you please walk us through like a typical consultancy session?
Sure. So there are a couple of reasons people reach out to us. Well, they are
At OAWA.
at OAWA.
Let's mention that.
Yes. So the first thing that they reach out first to us is they reach out to us saying that, oh, we are not getting clients. We don't know whom to reach out next. I have reached out to all the 50 of them, and out of the 30 are my clients. The other 20 are not interested. They are not picking up my phone, so I don't know what to do.
Oh.
So that is the first thing. So So how a consulting session works is that what we do with them is that first we sit down and see their current business model, how they are presently functioning. Okay. So the second thing that we work is on their belief system.
Okay.
Okay. So first we work with them on their business model, that what is actually achievable in today's market times.
Yeah.
Second is that we work on their belief system, saying that how do I achieve that? Because sometimes, many times we see that they're stuck at 10 crore for the last 5 years and thinking that they are unable to go past it. So we work on their limiting beliefs
Okay.
and make them move from a fixed mindset to a growth mindset. So that is the one large piece of work that we do as a consultant. Then that what we, as a typical consultancy session, is that we start working on their expertise, getting them identifying what all small little gaps which are there in their expertise level and trying to work on that.
Yes.
Okay, filling in those gaps. The third big piece is that as they get bigger, okay, we work on their branding. People,
Very important.
very important.
Marketing, branding is very important.
Personal brand, firm's brand, and so on and so forth, so that people are able to attract clients towards you. You're not just continuously chasing somebody for a client. No longer you need to be dependent on referrals or cold calls and so on. So we try to break that and build a branding around that so that it could be at multiple levels. It could be offline, online, and so on.
Okay.
Then the fourth one is on their communication, because words are powerful.
We say communication is the key.
Communication is the key. So the power of words can make and break a transaction. So what you speak, the right choice of words. So there is a whole set of psychological trigger words that we have. We work with them and work with them from a role play perspective so that they are far more effective communicators eventually in front of their clients. Then comes sales. What we figure out is that in our consulting sessions, people try to go for sales as soon as they can. This is what we recommend, blah, blah.
Acha.
But we try to change it on the head. We get into something called a consultative sales process. So this is the fifth one. And finally, we work on their team. So this entire consultancy sessions, which runs over multiple months, starts with the business model, their mindset, expertise, branding, communication in sales, team, and their operational efficiency.
Beautiful. So people at OAWA, you focus on key aspects and mainly focus on their branding and communication, how they can cater to their markets individually.
And how do they get new clients?
New clients is very important.
Somebody who is a complete stranger to you, how do you ensure that that person walks up to you and opens an account with you?
And a repeated client?
Absolutely. So how do I check like what is working? Okay.
Yes, very important.
So there are 4 things that we keep checking. Is that how many new clients you are able to attract? First. Number 2, how many existing clients are retained with you over a period of time? Third, what is the growth of your AUM?
Yeah.
So it's just not the clients, the AUM. And whether the kind of feedback that you have been receiving from the clients, how many positives, negatives, and so on. So these are the 4 big success metrics that we keep checking for each of them to see whether they are progressing in their profession or not.
Perfect. So like with your experience across different market assets, how do you tailor your advice to distributors dealing with both domestic and international clients?
Yes, Shepta. So very good question. So we see a sea of difference between Indian wealth managers and overseas wealth managers. Indian wealth managers, 90% of them, just throwing a number, maybe 95%.
I can just see you laughing. Do not.
So 95% of them only talk about returns. Okay. So like, for example, let me give you an example.
Yeah.
Maybe a little easier to understand. So what is a return? So when you are as an investor, if you're investing in the market, you would expect a return.
Something back. Yeah, it's scarce.
You would expect 10%, 12%, 15%, 20%. But the thing is this, you are not an investor from day one, because while you know that the markets deliver a higher return, and it has been delivering a higher return, but still many a times you choose to keep the money in the bank. Because because money is safe in a bank, you will definitely get that 5%, 6%, 7% back. While markets deliver 12%, 13%, and so on.
It's risky.
It's risky. So this is a good term. But the thing is this, Indian wealth managers do not discuss risk with their clients.
Oh.
So as an investor, I know the markets deliver higher return, but I don't know the source of risk. Higher the risk, higher is the return. Okay. If instead of 12, the market is delivering 15 or 20, obviously the risk levels are going higher.
Right.
So generally, Indian wealth managers resist from talking about risk.
Mm-hmm.
However, in the overseas,
Yeah.
the conversation starts with risk.
There's a clear transparency.
Absolutely clear transparency. Investors clearly come into the market at various levels of risk levels A, B, C, D. If they're going to a D level of risk, obviously they would expect, and they know the quantum of risk that they're getting into. So we wealth managers in India, our inability to identify risk, quantify risk is something which is a stark difference between overseas wealth managers in India. So that is the space that we are trying to work on. So when I said building expertise in terms of identifying risk in the market and ability to speak about that is far more important.
So which path you find better people are following in India or across the borders? What we should tell the clients about the risk, or we should just keep it safe with us, and over the period of time they should clarify with themselves?
No, risk has to be spoken. There is no return in an absence of risk.
You tell your client about the risk.
Absolutely. You have to tell the client about the risk because it is their money which is getting invested in the risk. They have to be aware about what they're getting into.
Oh.
What is the potential downside that they can expect? So we definitely have to speak about risk. If we don't speak about risk, conceal the risk, what will happen in case the market comes back and starts to bite you at some stage? Obviously, they will understand something has been concealed from them and the trust will go away immediately and it will not come back soon.
Has it ever happened with you? Like you have tell the clients about the risk, and the client said no, we don't want to invest.
It's important. You know what? Your risk appetite might be different from mine.
Yes.
Okay. So there are three ways of investment. So if you're getting into that, one is a random investment. You invest and then you figure out what is the kind of return that I can reach. Second is a goal-based investment. So I have 1 crore rupees. I want this to reach to, let's say, 3 crore rupees. How soon can I reach there? In 3 years, 5 years, 10 years, 20 years. So that is a goal-based investment. But the third one is a risk-based investment. So the investment is a journey. Everybody's money will keep growing. Okay. Now the question is, when this growth happens, what is the experience? Are we moving in a straight line or are we continuously going up and down? Risk-based actually ensures the comfort during the journey. Like if you're traveling from Delhi to Noida, you can walk, you can run, you can take a cycle, you can do whatever. But the comfort will be ensured in case you're aware about the risk appetite of the client. So if you're aware about the risk appetite and match a product which is an appropriate risky one, then the client will also be expecting what is eventually happening. They are not getting into something which is completely unknown to them. So knowing the risk appetite, talking about it, and then recommending a right product, I think is the key to long-term relationship with the client.
I mean, well said. It's very important to maintain a transparency with the client you're working with to ensure a smooth journey, right? This is very important for our viewers to know. You have managed funds worth $1 billion across different regions. What insights do you bring into your educational programs at OAWA, OAWA?
At OAWA, we are a knowledge-driven organization.
Yes.
Okay. So we are just not a consultant. We are just not an educator. We are an educator come consultant, and specifically in this world of wealth management.
Correct.
So in my 26, 28, and there are many people like me who are associated with OAWA, who are working in this mission with me. What are the insights? The first big insight is that markets are risky.
Yes.
And we need to maneuver it well in order for the journey to be comfortable and nice. Number two, what is risk today might not be risk tomorrow.
Tomorrow, yes.
So something could be a trend reversal thing. Something might be just a noise. They'll just come and go.
Correct.
Okay. So ability to see through this, identifying this is important.
You have managed funds worth $1 billion across different regions. What insights do you bring into your educational programs at OAWA, that is OAWA?
All right. So at OAWA, where there are many people like me who are working and who have had existing experience of managing money for their clients, advising money for clients, and so on. So the first thing is that there is risk in the markets. Risk needs to be identified and managed. So that's a big risk. That's a big insight that we bring in. Secondly, what might be looking normal today might not be normal tomorrow. There could be existence of risk and emergence of risk and so on. And the third big thing that we bring onto the table is that all the learnings that we had while working with so many other wealth managers, both in India and globally, the way to look at markets and their ways of building business.
And identifying the actual problem.
Identifying the actual problem. This is what we call strategic risk assessment.
Strategic risk assessment.
Strategic risk assessment.
SRA.
SRA.
Okay.
All right. So when you are recommending a product, first we are recommending a product as a solution to a problem in a client's life.
Yes.
Strategic risk assessment will be ability to identify what is the real expectation, the risk that their problem that they're going through. And then you will identify a product as a solution to solve that problem.
So we have come back to again from where we have started. Experience and expertise is very important.
Absolutely.
Yeah. We have come to an end to our podcast. I would like you to please tell us one or two success story.
Sure. So presently we have over 3,000 people who are working as mentees under us, as mentors. There are innumerable success stories, but the most important ones are that we have seen people who are able to grow their AUM by like 40%, 50% in a matter of few months.
In a matter of few months.
Because what we truly believe is that it is not the capability of anybody of us in this space. There are small little changes in the approach that is needed. So small little shifts actually bring about a big change. So ability to grow the money. And secondly, people have stopped chasing clients, okay, and running behind referrals. People are reaching out to them at ease and becoming aware of the services. So there are many kinds of success stories of these kinds which are there amongst people in our community.
They're working on the pull theory, not on the push theory.
Absolutely. Well,
Perfect. Lastly, what are your future plans at OAWA?
So at OAWA, we actually are on a big mission.
Oh.
Okay. So we feel there is a framework that we have built called Growth Metrics Pinnacle, which is the name of the framework, which works around all these aspects about brand building, communication, sales, expertise, and so on. We are on a mission to implement this Growth Metrics Pinnacle in at least 10,000 mutual fund distributors and RIAs in the country in the next 2 years.
2025 is said to be like the year of technology. So with technology rapidly changing the financial landscape, how does OAWA incorporate such tech solutions or digital tools into its training and consultation to keep the distributors ahead?
Absolutely. So in this world of education and consultancy, what we see is this rapid advent of technology, which is changing the way we do business.
Absolutely.
And now there is AI, which is also moving deep into the way our thought process also. So that has also got into the space of wealth management as well. So at OAWA, we are absolutely conscious, aware about the various tools which are coming in. Tools which are coming in handy in terms of getting new clients, tools in terms of creating communication, tools in terms of identifying the risk in a client. Are the several various others technology.
There are tools which are coming day by day.
Absolutely. Tools in the form of softwares, platforms, and so on, which we are absolutely introducing in this consultation with their wealth mutual fund distributors at OAWA, so that they can incorporate them and make their job easier. So whatever time they were spending earlier, they can do it in fast.
So they'll get this tool nowhere else other than at OAWA, right?
So there are many tools that we have developed for them.
So you have developed, okay.
And we are also telling them how to use the other tools which are available in the ecosystem to do their work better and faster.
Oh, beautiful. I think this will definitely help them to gain more insights and grow their business well. Perfect.
Absolutely.
Oh, beautiful. I wish you all the success, and definitely people have gained insights and a lot of information from today's podcast. Definitely we'll be back with another one soon on such information. But I would like to just thank you first for being such a wonderful guest. I had an amazing time with you, sir. I hope you had the same.
Absolutely, Shweta. It was a pleasure being with you.
Perfect. I'll be back with another episode. But till then, stay tuned on Storymakers. This was your host, Shweta Khan, and I am signing off.